Nvidia is arguably the best business in the world today, and we'd sell it. Firstly, let's look at the positives. It has a near monopoly position in its market of GPUs, the technology which powers the development and training of large language models, a market set to grow strongly for years to come. It's also become a market leader in systems on chips. So what's not to like? And therein is the problem. The market loves this corporation. The valuation is mind-boggling. The stock has risen from $6 to $185. A 30 times return since the start of COVID. So for the stats enjoyers among you, Nvidia has risen from an equivalent 10 cents in January 2000 to $185 in 2025. That is a 1,850 times return of investment. Not bad. So much for price, let's look at valuation. And this is where things get mad. At the current price, Nvidia's market capitalization is $4.6 trillion. It trades on an historic PE of 53 and a consensus forward multiple of around 35. Now for perspective, the total capitalization of the FTSE 100, the 100 biggest and best stocks in the UK, is less than 3 trillion. The GDP of India, a country with over 1.45 billion people in it, in 2024 was listed at 3.9 trillion. Is Nvidia overvalued? Of course it is. Can we technically prove this? No. Can the share price go even higher than its current Alice in Wonderland evaluation? Yeah. And when will the reversal come? What will be the catalyst that results in this massive correction? Well, unfortunately, it's impossible to exactly know. Perhaps AI fails to deliver on the most optimistic projections. Perhaps the company loses the talent that built them and becomes complacent. Perhaps it fails to innovate. There's any number of misfortunes or external conditions that could impact them. But we do know that the stock price is factoring in near perfection in delivery and continued dominance in AI. Any material slowdown in growth or a failure to meet extremely high market expectations could lead to a sharp price correction. And with the overall market high and market leader Nvidia currently riding the wave, it could easily find itself one of the biggest victims of a general market reversal. And some of Nvidia's largest customers like Meta, Microsoft, Amazon and Alphabet are developing their own AI chips and solutions. And that's not even accounting for long-term GPU competitors AMD. In addition, trade tariffs with China have compromised one of its main markets, highly incentivizing local competitors to develop their own solutions. Also, the history of technology stocks tells us that once market darlings have a tendency to revert to dinosaur status. A classic reversion to the mean, and you can think of Intel, Kodak or Nokia for examples. Now let's be clear, only an idiot would deny that Nvidia have been an incredibly strong corporation, an incredibly strong performer. All the Nvidia millionaires trailing around Santa Clara, California and buying up all the Rams home game tickets can attest to this reality. And it's possible that the continued demands for greater computing power in fields such as quantum computing and robotics will give Nvidia new emerging markets to dominate. Data scientists and developers have spent years building AI models using CUDA cores, and so would incur massive costs if they tried to switch to an alternative platform. And while the giant tech players may have the will and capital to do so, first movers advantage could well see Nvidia be the industry standard in the wider market, not only now but for years to come. This is not a bubble, or at least not in a traditional sense. We're just expressing our concern about the market's currently demanding evaluation of a first-class company. And it's possible that the PE ratio of over 50 could well revert to something closer to the sector standards of around 29. However, it's highly unlikely that Nvidia crashes to the level of falling to zero the way something like cryptocurrency could. Investors in Nvidia, and particularly those who recognize its wonderful prospects at an early date, have enjoyed probably once-in-a-lifetime returns. However, the valuation is right up there. In our view, current holders should strongly consider saying thank you and taking some of their chips off the table. In the meantime, if you don't own it, don't allow your FOMO to suck you in at this very elevated valuation. And we can use this as a little case study in how to approach market darlings. Our philosophy is to treat supposedly magnificent outliers with preposterous underlying ratios with caution. Now, it's not impossible that in 10 years time this video looks a bit foolish, but ultimately we've seen this cycle of extreme market euphoria playing out with different names in Nvidia's place over and over again. And so it's very hard for us to ultimately allow ourselves to be swept up in the hype. We hope you enjoyed this video. If you did, please do all the YouTube stuff for us, like, share, subscribe, and we'll see you in the next one. Take care.